What is going on out there, peeps? All right, so look, I know you guys, I keep telling you, for you newbies, you get a little panicky when you see the gold and silver prices go up and down with huge swings as well as cryptocurrencies. You can't panic. I told you guys that this is what these so-called elite do. They try to take advantage of speculators, in other words, amateurs, by scaring you. And I said that before, and somebody said, no, how do you know they're doing that? They do that. I'll even prove it to you here in just a second. But speaking of precious metals, if you're thinking about getting some, please give our friends over that Money Metals Exchange a consideration. The link is in the description. If you buy more than $100 worth of precious metals, use promo code Pimpy, P-I-M-P-Y, and get a free ½ ounce of silver. We have Pimpy's Investment Chat. It's the same name as the YouTube channel. Come on over. We do talk about gold, silver, cryptocurrencies, as well as foreign currency investment opportunities. Which reminds me, if you would be so kind enough to hit the subscribe button, because when you subscribe, it helps out the channel, and I surely do appreciate it. No politics here. Bring that over to here, which is the hidden things in front of your eyes, all right? In this group, you can talk about current events, QAnon, politics, NESARA, GESARA. A quick reminder that I do have, by the way, yep, I'm on YouTube, all right? And some of you people are starting to figure that out real quick. So it's very interesting the way YouTube works, by the way. Let's look at silver. So silver keeps teetering somewhere between, $27 and $29. Going back, forth, and gold's going somewhere between $19 or $1,930 on up to as close as $2,000. Keeps going back, forth. I told you that this happens sometimes. What they try to do is they try to shake speculators. Speculators are people who don't know anything about the market. They're in there. And when you panic and you sell on a dip instead of buying on a dip, then they snag up your physical, your stockpile. You know what I mean? With your holdings. All right. I told you they do this. So anyways, I'm listening to this gentleman over here at Arcadia. And, again, I'm going to leave a link to this right here, Arcadia, so you guys come check it out. But we're going to listen to what these guys saying, and then I'm going to comment as it goes along. But listen to what he's saying. There's a dang shortage now on silver. And I mean like a serious shortage on silver. And it's only going to get worse. But he said what they'll do is they'll shake the market. He literally says that central banks sit around every 2 weeks and talk about how they're going to do this. They plan this. All right, so you got to listen to this, because this is why I tell you not to panic with the market. Ready? Here we go. Listen to what he has to say.
Which is freely convertible to all other foreign exchange currencies, i.e. you're long one, you're short the other. So when we see the price of gold or silver rise, what we're really evidencing is the US dollar price falling against gold or silver. You're long one, you're short the other. But it's happening alongside the entire basket of all other fiat currencies. So exchanging these competitively debasing fiat currencies for gold or silver is clearly the best option to preserve your wealth.
You hear what he's saying? Don't hold money. Don't hold money. He's telling you, he don't care what currency you got, what country in. It should not be sitting around. That they're devaluing it. That's what they're going to do. And they have a system of how they're doing this. Therefore, your money should be in gold and silver.
From any other further currency debasement. So this spot, or let's call it foreign exchange gold and silver demand, is, as I say, 10 times larger than what is traded in the captive COMEX casino. Ultimately, it seeks physical delivery, which is not what the COMEX used to be, but we can talk about how that is evolving to a delivery market. But ultimately, these positions are seeking physical delivery, which in turn draws from a finite amount of real bullion, which is immediately deliverable. But unlike all other foreign exchange crosses, bullion cannot be printed to meet demand. So to manage the foreign exchange crosses, every 2 weeks, central planners meet in Basel, Switzerland, to agree, amongst other things, currency interventions, which just include gold. Now, that's the only part that's ever denied.
So currency intervention, they're manipulating the currencies.
However, interestingly, of course, the Bank of International Settlements has its own gold desk run by Benoit Gilson, who declined our lunch appointment last time I went. But central planners fully admit to regularly intervening in the various foreign exchange crosses. Now, where you're, as I say, you're long one, you're short the other. And that determines your benchmark price. We see it every day. That's what the euro is priced at today versus the dollar. That's what the yen is priced at. It's not rocket science, but because gold can't be printed, central planners have to carefully manage the retreat of the US dollar against deliverable gold and silver currencies. So to facilitate this, the BIS has this gold trading desk based in-house.
So what he's saying, just in case you're not catching it, okay, is there's not enough gold, there's not enough silver for those people who are asking for large amounts. And it's putting a strain on the COMEX, just like I said it was going to do, okay? But what he's saying they do is they manipulate the value of the US dollar. So cause speculators, watch, he's going to tell you, they manipulate the value of the dollar to go up and down to scare speculators into parting with your holdings. That's you. So if you pay $30 for a silver coin and all of a sudden it drops down to 15, you might panic and think, oh my God, I'm going to lose everything. Therefore, I need to sell it at $15. Don't do that. When it drops down, you buy more. You don't sell. Okay, so he's saying that people who don't know any better, you're going to hear him say this, that they're manipulating the U.S. dollar. Other countries around the world are doing that. The U.S. dollar, they're manipulating it. So this way then, watch what he says. They're trying to go after those who are speculators that are holding on to it.
Now, we can look at the BIS closer in a minute because there's some actual very interesting information relating to the reset. But kind of let's look at the effect of currency intervention in foreign exchange gold, because this actually answers a lot of questions. Now, official currency interventions, as we say, fully admitted, accepted as par for the course. Many central planners, central bankers have admitted it in the past, where they admittedly step in, or after a G7 or G20 meeting or whatever it is, they talk about, well, who is going to competitively debase their currency against each other at what rate. And essentially that's where, I mean, this is essentially where the entire system collapses. But what they do is they take FX gold. If they take the FX price of gold too low, it dries up the offer to sell bullion. So offsetting this effect, 100% relies on wrong footing as many paper chasing speculators as possible, because they're the only source of adding supply. And there's no way that if you're trying to position yourself long as a central banker, and we fully acknowledge, and there's reports of central banks going long, sovereigns going long, and we also know that an ultimate reset has to occur in the foreign exchange markets.
So we're talking about a global currency reset. He's saying that there's not enough supply for gold and silver. So what they do is they manipulate they don't have enough inventory of gold and silver. So what he's saying they do is the banks manipulate the values of gold and silver to take the holdings from speculators, because speculators who don't know any better and they panic, they part with what they have when they shouldn't. I keep telling you guys, I keep warning you, if the value drops, you buy on the dip. And not to ever part with your silver. Just wait and it'll go right back up, or your gold. All right? He's telling you that the banks admit to doing this.
So, of course, these guys are not going long. What they're looking to do is to draw in supply from the speculators, captive in the COMEX casino. Now,
okay, see what he's saying? They don't have enough inventory. So how are they going to get inventory? By drawing in the inventory from speculators, those who panic, those who get scared, those who part with whatever bullion that they have.
Rigging prices below equitable supply-demand fundamentals, what it does is further tighten up what little real bullion is on offer at market. And this is talking about as a wholesaler here. And it's immediately recognized by the entire wholesale market participants who, just like today, competitively jump in and lock in cheap spot index ounces and tons at heavily unsustainable exchange gold prices. So it's this equation that determines the price support point. So when what we have now is really a lot of fiat chasing what tiny little bullion is actually on offer, which further tightens supply, and the offer to sell bullion rises to meet the demand. So in other words, it's really summed up how much wrong-footed non-delivery spec supply can be chart painted with insiders taking the long side of each sale against competitive real market forces who recognize gold and silver bullion is deeply undervalued and are locking in prices for physical delivery. One thing is clear, and I think the cause for much misinterpretation and wrong footing is the more intelligent the mind, it makes it much more difficult to make sense of a market where the action has intermittent bouts of extremely counterintuitive action, just like we're seeing today. And we're talking about action that's blatantly counterintuitive to all the fundamental supply demand drivers. And I'm referring to the action we've just experienced in the last 2 weeks of August, first 2 days of September. And I'm sure you've got many clients who'd love to be able to pick up the phone and ask you, can we take delivery of silver at spot, Chris? I don't know what your answer would be there.
I mean, you can't really do that with, I mean, it's interesting. People look at the COMEX as the spot price, but I think we even talked about it a couple months ago, whether we were going to find out if there's delivery or else at some point, you know, the spot price becomes a little bit irrelevant. I mean, certainly for anyone buying retail, they're paying plenty over spot. So,
yeah. And even from a wholesale market perspective, I mean, we're looking at, what should be a T plus a half delivery. Now, the wholesale market, that's what we used to pay, maybe between 2 to 20 cents over per ounce on a wholesale bars. It would be T plus a half. We'd have it delivered in our vault and we'd have it delivered to us within half a day. Now, we're lucky to have, really, if we want size, it's T plus 90. I mean, that we're already booking, paying for, i.e. spot indexing, locking in the price of spot for silver, that is actually not going to be delivered to us until January, February, and March. I mean, that's ludicrous. That really tells us how underpriced this market is.
So in case you're wondering, we talk about T plus 90. So when he said T plus 1, T plus, he's talking about how long until delivery is sent. So T plus 90 is, he's saying, 90 days. So from the time of the order, it takes 90 days. Why is that? Because they don't have enough bullion to cover the orders. So what they need to do what they need to do, scare us amateurs is what they try to do. You do something stupid, you go sell your silver, and then it gets back to them, and then they fill the orders, okay?
And it's really, this is where the problem comes. I mean, I think this is evident to everyone but the speculative COMEX paper-centric traders. It's these speculative paper traders who provided the ignition fuel for officials just through August and today. But officials are doing this, and they're doing it more like by bid pulling at strategic points than going short. But essentially, they're not ready for gold to hit the $2,500 and $35 revaluation trigger points. Now,
did you hear that? So we're looking for gold to hit $2,500 and silver to hit $35, and it would trigger a reset. I told you that was coming, and they're trying to delay it because all the rich people are trying to move into position to get a lot of it. There's not that much there.
The current action really is just an attempt to simply slow the ascent of an unstoppable revaluation of gold versus the dollar. Now, the consensus...
Get excited about that. Do the Pimpy dance. Didn't I tell you this was coming up? Sooner or later, they're going to have to do it. They have to revalue gold against the dollar. And right now, we know how much is out there, how much debt is out there, and how much money has been printed.
Of some of the brightest minds in the industry is that 2,500 and 35 silver are still the current trigger points. And I'm talking about some of the major trading desks here. And we're talking about some of the major trading desks who are buying today. And so really, that's the level that really is established as the price revaluation, where it'll have to be squared, basically. And we discussed this kind of counterintuitive action before, but when the casino holds the financing book on enough speculators, which is i.e. a margin account, what people call a margin account, but essentially you're sitting on the book of your financer who is looking at your margin account and says, right, okay, well, hang on, we've got an aggregated level here. If we flush this level, and after all, the house has enough position concentration to do that, it's easy at that point there. Once we know that, it's easy to net out the pain points of the naked longs versus those real no-stop hedgers who are coming in. And what it does is rinse out the fluff, but they're very careful not to hand the advantage to competitive buyers looking to buy cheap ounces for delivery. So really, you know, what we're saying is, look, it's no secret that the COMEX is already, we know it's a 95%, probably 98% algo-driven market, but it's the primary HFT bots, the high frequency trading bots that are controlled by the house that influence the agnostic neutral algos seeking to simply take a tick either side of the market, which is a lot of what the action we see, except for when you see, like yesterday in silver, for example, what do you see? You see the pit close, the thinnest access market, and then suddenly 6,500 contracts go on sale in the thinnest market moment. Now, come on. I mean, it's a no-brainer. This is actually so obvious.
See right here?
So really, what they're doing there is they're really just weighing up, the large institutional COMEX long positions. What they're doing is they're hedging a rising, ballooning, overvalued stock market, and so you've got to separate these real hedgers that are ballooning, that are hedging this overvalued stock market, and also legitimate physical hedgers. And what you do is we've got to balance that up against the flows of plain vanilla speculators who just recently been chasing a parabolic short squeeze higher. And these speculative momentum-driven positions, we know they have visible stops. They're heavily margined, probably to the limit, and which really sets them up to be targeted by officials seeking to slow the rise in GC and SI and, you know, gold and silver futures. So as we discussed last time, Chris, these sort of raids are not random. It's carefully calculated.
He already said these kind of raids. They're talking about raiding against speculators, right? But he's talking about paper contracts, but that's okay because it affects the physical bullion market big time. So anyways, I know that this guy, he's going to keep going on, and I don't need to do that. So basically what I was trying to show you is this. Didn't I tell you there's already a strain on the COMEX? So what they're doing is these guys are getting together twice a week and figuring out ways to manipulate the US dollar so that it would keep people from rushing over to buy bullion, whether it's gold or silver, okay? So what if they do it enough and they lower it, people panic and then they sell their inventory, all right? And then that's how they pick up on it. So the trick is, like I told you, when it goes on a dip, you buy on a dip. You never sell on a dip. And here what he's saying, we're close to a reset. The stock market is way overvalued. We know it's artificially pumped. We know that. We know that they artificially pump it to get the silver and gold market to drop, and that's what happened. All right? So nonetheless, look at it. Here we are. I mean, this, again, 29,000. Yeah, so nonetheless, look at this. And now it's just going right back up, okay? So again, I want to warn you guys, I'm just going to keep this in your head so that you guys get sick of it. Eventually you'll know. Don't panic if the market drops because they're manipulating the market. They're doing this to scare the average amateur person into parting with their bullion. So some of you are out there like, man, Pimpy, dude, I spent $600,000 on it, and then it dropped, and I lost like $4,000. And I'm like, yeah, that's okay, man. Calm down. I lost a lot, okay? A lot. But I didn't actually lose it. We didn't lose anything because we're not selling our inventory. You see what I'm saying? You only get a loss once it's sold. So don't sell. I'm telling you guys, it's the same thing with cryptocurrencies, you guys. Buy what you want and leave it alone and just let it do what it's going to do. So the markets are artificially pumped right now. We know this. Eventually, they're going to have to stop. We got too much money out there in circulation. Too much money's being made. We have more than one bubble. We have a bond bubble, a real estate bubble, a stock market bubble, and this isn't just here. This is worldwide. So you see what they're doing around the world is trying to figure out, the central banks are trying to figure out how to maintain and keep down the value of gold and silver from doing what they want to do. I guess everybody's trying to get into positions what they're trying to do, and they're all going long. Long means they pick up, they hold, they don't part with it for a long time. Okay, so I told you guys that this was happening. I wanted to play this for you, and hopefully you got something out of it. And so the bottom line is what? Buy more silver. Okay, I told you coming up here this month that there's a royal families are moving into position, both on paper and physical. Okay, so you guys just keep going. They're putting a strain. The more we buy, the less there is out there. The less there is, the more the value will go up, regardless if they're manipulated or not. Eventually, it's going to trigger a reset. Did you hear what he said? A reset. So if gold hits 2,500 and silver hits $35, they're going to have to reset. So hang tight, guys, because we are almost there. I told you we were close. So I'm just watching this for you, and I just wanted to share this with you, all right? You should be excited about this, all right? So anyways, if you like the video, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later.